All right, everybody, welcome to the latest webinar from VARC Solutions. We're going to talk about why every small business needs a CFO advisor. Got a lot of good content to cover. Today's webinar is going to be more of a kind of like a panelist interview type of format. So Kevin Lacey is our resident CFO, MBA, CPA, very knowledgeable and experienced CFO partner that we work with. And so, Kevin, I'll let you do your intro here in just a second. But before we kind of get into the content, just to kind of share some of the basics, you do have a question panel. You do have a chat panel. So if you have any questions, please do put those in there in the chat panel. That way we know you're sitting there waiting for an answer, or if you have any thoughts on what we discussed. If you've got any specific questions for Kevin, like this is something you really want to know, in addition to the questions that we already have scheduled to be discussed, let us know. Also, this webinar, just like always, is going to be recorded. You will get a link to the recording afterwards. So definitely. And then if you also want, although this webinar today is not very PowerPoint heavy, so there's not like a whole bunch of slides with content on it that you're going to necessarily want. But if you wanted a copy of the PowerPoint with the questions that we discussed, just let us know. I'll be happy to send that to you. So that covers, I think, just some of the housekeeping. Also, one other thing, this webinar is eligible for CPE credit. It would be 1 credit hour. So if you're interested in CPE credit, all you have to do is participate throughout the webinar. When we ask for questions, please do, show us that you're here by putting in a question. There will be several polls throughout the webinar as well, and that is also a functional requirement of CPE credits. So please participate in those polls, especially if you need CPE credit. And at the end of this webinar, we'll also provide a link that you can provide an evaluation form, and that's also how you request a CPE certificate. Because some people attend webinars, they don't need the certificate, they don't need CP credit. So that's kind of our way of saying, if you want it, ask for it, and then we'll make sure and get it to you. So let's go ahead and get into the agenda. And so basically what we're going to be covering today in today's webinar, we're going to be talking about why does every small business need a CFO? We've kind of outlined that into, in the range of 7 to 10 questions that we're going to interview Kevin for and get his input on, generally broken down to these kind of seven areas, different accounting roles within a business, kind of like what's the differences between, different types of CFO types of titles and what they do. What size businesses should maybe be considering a CFO, some of the problems that CFOs solve, how do we measure success, some of the outcomes, and then really kind of like what does that look like, if you're working with a CFO, how would that actually work and how does that look? So Kevin, let me do this. I'm going to stop sharing so everybody can kind of see everybody's camera. Give us a little bit of intro. Kind of tell us, just first off, before we get into the questions, a little bit about your background as a CFO.
Hey, thanks, Brad. Thank you for having me. And I've been doing this for about 30 years. And my first job right out of college, the company that hired me handed me a box and said, "Here, go build an accounting system." So from the day I started, I've always been interested in systems and how things work and the strategic planning and making the decisions and the advisory. And it's always been part of what I do. I've worked in several Fortune 500 companies. I've written 10Qs and 10Ks for small public companies. So I have a strong background in internal control. But every client I have and every engagement I take, I have a strong bent towards the strategic, even if it's not a specific CFO advisory client. So I've been doing this about 30 years and really enjoy what I'm working on now.
Awesome. And it's that strategic thing, strategic part of what we're talking about here that is oftentimes missed. Whether you're an owner or you work in a business, the hardest part is getting out of the business and being able to think about it strategically. There's all the stuff, all the fires you're putting out every day. all the work that has to get done. So being able to have someone like Kevin help you step outside the business and focus on what you're trying to do and how you're trying to do it versus just doing the day to day is very, very important. So Kevin, thanks for kind of bringing up that strategy part. I'm going to launch our first poll to kind of get us kicked off here. And the poll is, first question, what is your experience working with a CFO? Have you ever worked with a CFO? Have you worked with a CFO maybe in a prior company? Or are you currently working with a CFO? So let us know, and that way we'll kind of get a sense for how we can talk about different aspects of the role as we go through it today. All right. All right. Looks like we've got the poll results here. I'm going to go ahead and end the poll, and I'm going to share the results. Everybody should see this now on their screen. It looks like about a little over a third have never worked with the CFO, Kevin. A third are currently working with a CFO, and then 25%-ish have worked with a CFO, but only maybe in a prior company. So that's really some good context. So what that means is roughly 2/3 are not currently working with a CFO, and that might be something that they could benefit from. Perfect. All right, I'm going to now go back to the slides, and really, again, the slides on this webinar is really just to show you on screen kind of the questions that we're asking. So I'm going to be flipping back and forth between kind of like the slides and really just the Kevin and us talking mode. So Kevin, let's talk about the first question here, and that is, when we look at the different types of positions within the accounting category within a business, what are the differences when you think of bookkeeper, controller, CFO, and there's probably a few other categories as well that I didn't list there.
When we're talking about the different roles, I think it's super important to be clear on what everyone's responsibility is. And one of the first things people told me when setting up your own business was if you make an org chart, and even if you're in every square, every position should have a name and a main responsibility to it. And some of these are combined. And actually, when we talk about the strategic, it's the easiest one to overlook. And it's kind of on a basis of negative assurance. So if nothing goes wrong, you don't see that you need it. If you don't get into a car accident, you don't realize how bad you need car insurance. So when we talk about the different roles, we look at just the traditional model of the bookkeeper is recording the transactions, the accountant is organizing the transactions, and then the controller is overseeing the transactions. And then when you layer on the CFO, you get the strategy. As far as the first three roles are more, they're more direct execution roles, where a bit of controller and CFO are more planning. And when we combine some of these roles, it kind of clouds the delineation of responsibility. So when we talk about the CFO, especially the strategic CFO, the more they're removed from the intricate operations, the more they can advise on a strategic perspective and ask better questions.
So it's kind of like you need multiple people or multiple roles. You need somebody that's kind of in the weeds doing the data entry and the coding and the bank reconciliations, right? Entering the bills, paying the bills, all that stuff. But that's not typically what a CFO does, right? You're not really working in the transaction level data entry realm of that, right? It's more, like you said, the strategy part.
Yeah. And I think there is a lot of place for the CFO in directing the operations, but as far as the execution, the more that is outside the CFO's control, the more effective the CFO is.
Right, right. Sorry, go ahead.
No, I was just saying in his strategic role.
Yeah, and I think how you describe that as being directing the work that's getting done, I think is maybe understated, because if I've got somebody in my company that's doing the bank feed is coming into QuickBooks Online, for example. Transactions are getting coded, but are they being classified properly? Are they being categorized properly? And is the chart of accounts set up in a way that helps the owner make better business decisions? Those aren't necessarily the things that a traditional bookkeeper would be looking at maybe or thinking about. They just want to make sure that it's being accurately coded, but not necessarily how is this data ultimately getting used to make decisions.
Right. And I think that really speaks to the use of the data. The one phase of it is the bank account reconciled? The second phase is it telling, are the financials telling the story as far as a trend or a pattern that we can use to make decisions and plan strategy around?
Perfect, perfect. So, I've actually got a question that wasn't part of the prepared thing. I tend to do this, so apologies in advance. When I think of stuff and I'm like, yeah, let me ask this question. What's interesting about this is even dealing with our clients, working with our clients, not every client that we work with has all of these roles. And so, some have a controller, some don't have a controller, some have a CFO, some don't have a CFO. I'm just curious from your perspective, if what order maybe should these types of positions be added to a company. So if you think about it, right, you're a startup company, you're doing everything, as much as you can. You're selling. You're probably got your mother-in-law doing the accounting, right? And then you eventually will hopefully earn enough money where you can start hiring other people. Should you hire a bookkeeper next? Should you hire a controller next? Should you hire a CFO next? It's like, if you had a best case scenario, what would you suggest in terms of what to get and when to get it?
Yeah, I think it goes straight in order of what the owner of the business is letting go of, and what I think that's the main focus. How are you letting go of control of the operations in your business? And a rule of delegation is, what can you most clearly tell if it's correct when you get it back? Is the first thing you should delegate. So that
Hmm.
would be your lower level tasks. So you start with a bookkeeper recording the transactions, and then as you move down the line, you get an accountant. Maybe you have an accountant bookkeeper, but over and over, I've seen it pretty much goes bookkeeper, accountant, controller, CFO is the way um, most small businesses kind of roll into it.
Okay.
A lot of times there's an accountant which is overqualified to do a good portion of the work, which would be a bookkeeper. Like, there wouldn't be a need for a bookkeeper and an accountant. So a lot of times it's accountant controller, but it's really kind of a pyramid like that, where it starts at the base tasks and then moves up. Almost a clerical accounting position comes first, because you can,
Right.
as the owner, you can let go of that much control and you can look at the bank account every day. But when it comes to the more strategic planning stuff, those are usually the later stages of most small businesses, that outside of public companies.
Got it. Got it. Okay, that makes a lot of sense. I'm going to tee up the next question here, and again, for those of you that are watching and listening, if you have your own questions in addition to what we've prepared, again, please do put them in the chat panel or the question panel. We'll make sure and get to those. The next question is related more specifically to that CFO role, because you mentioned CFO, but even within the CFO role, there's different tiers, if you will, or different aspects of that. So you might be thinking about hiring a full-time CFO, but there's also the word fractional that a lot of folks are hearing about these days. I might want to go hire a fractional CFO. But then, I know, Kevin, what you and I oftentimes or more often talk about is more a CFO advisor or CFO advisory. So help our the folks that are watching understand the differences between those, and maybe when one would be more or less appropriate.
Yeah, I think there's a bit of a conflating of ideas here, where there's a misconception that until you're this size company, you don't need a CFO. So, and that's where the kind of the division of different types of CFOs came in. So, a lot of the clients that I talked to could never afford a full-time CFO. And be able to retain or attract that type of talent. But when we talk about the fractional level or the advisory level, you're able to access that talent, that skill set in your company at a fraction of the price.
Yeah.
And when we talk about fractional CFOs, it's really a part-time CFO that's taking a lot of risk and responsibility in the financial operations, where the strategic advisory platform that I specialize in is where it's more of a coaching setup where the owner is guiding the metrics, the owner is guiding the decisions, the owner is accepting responsibility, they're fully bought into what's going on. We're just acting as kind of a coach to help them put together the numbers, to help them make the decisions, to help them get the clarity and the confidence and the control in their business that can help them move forward. So those are really the big framework of it.
Yeah, and I would say, isn't there also, and by the way, I have a question that's going to come up specifically talking about company sizes and like
Yeah.
what's most appropriate, but just at one level, at some point you're big enough, you've got enough revenue where it's maybe a no-brainer to have a full-time CFO. And I don't know where that starts or ends. I imagine it happens a lot of different levels for different companies, but if you're making 50 million up, I imagine you probably have a full-time CFO.
Yeah.
But there's going to be somewhere between 0 and 50 where you'll make that flip to full-time. But before you get to that point, you're going to need one of these other sort of stopgaps for where you are at the moment, right?
Yeah, definitely. And I think to your point, there's a lot of different variables that determine whether you need a CFO. There's transaction volume, there's workflow complexity, there's multiple operations. If you have multiple branches in your company, it's really good to have a CFO that's kind of centralizing the reporting and the different outcomes of the units. So the CFO can be involved at different levels, but that's where we don't really delineate as much as who needs a full-time CFO versus who doesn't. It's how
Right.
can we help companies on the road to strategic planning, because a lot of the times you don't get to this level where you need a CFO without some sort of strategic planning. And
Hmm.
the more planning and the more structure you can have in your company before you're ready to have that CFO, the more prepared you are when that CFO comes on board.
Well, and let's talk a little bit more about that. I did pull up the third question, which we've already kind of started answering, which is what size businesses should be considering a CFO. But what I didn't put in there was maybe why. Why should a business be considering a CFO at maybe one size versus another size? And you've alluded to it already, which is that if you're trying to do strategic planning, there's operational planning, right? Like, how do we go make these widgets? How do we go from, if we're in a retail storefront and we're trying to franchise, how do we go from one store to 5 stores to 10 stores, right? That just the operational part might not necessarily require a CFO. But when you think in terms of your role, Kevin, the strategic part of growth, again, whether you're a $1 million company or a 5 or a 10 or up, how do you think about helping clients on that strategy side that might have a little bit of the crossover between operations and purely just financial planning?
Yeah, I think the main thrust of it is it's not if you need a CFO, but how much of CFO skill set do you need. So looking at different companies, the owners of the company will tell you what their problems are. And most of the time the owners are very good at whatever sector they're in, and they go ahead and they open a business. And although they may be a fantastic electrician, they're not used to running a business of electricians. And you kind of have this confidence of you're good at what you don't understand, because nothing has happened so far and you've always excelled in that field. So we talk about where the company wants to go. We talk about what the company doesn't have control over, what they don't have visibility into, and we develop metrics based on those blind spots and help the company get to where it is, or get to where it wants to be, I should say. And it's not always a company wants massive growth,
Mm,
but sometimes you need to avoid certain risk. And we've seen this year massive volatility around trade policy. I had a very large client that almost was put out of business
mm,
because Target, their main customer, stopped ordering.
mm,
And it really wasn't something that they had really planned for. Their customer base wasn't diversified enough. Um, and you have the larger you get as a company, the more you have segments of the business almost running autonomously. So the CFO comes in and says, not only brings those interests together, but helps you change your execution strategy or your risk strategy. And I think that's one of the biggest things is the risk mitigation or identification, where the CFO steps in. And when you start having these conversations, I can ask the questions like, well, have you thought of this? Or what happens if this happens? And although the business owner, sometimes they don't know at all, they don't have an answer at all, but sometimes they have a feeling they know. But then when they start to describe their plan for it, it really starts to break down and questions are popping up in their mind on how to handle it. So really, it's natural discussions. And that's why I love the metaphor of the coaching program, like a personal trainer. It's
yeah.
like a lot of this stuff isn't super specialized secret knowledge. It's intentional discussions and disciplined follow up and responsibility. And um, at You Need a CFO, we set up these systems and you can see these metrics tracking. And then we meet either monthly, weekly, or biweekly to determine whether the things that we identified are truly tracking towards our metrics. And when we change them, do our metrics change? So all this stuff comes out of discussion and iteration.
Well, I like a lot of the things that you're talking about, and one in particular that you mentioned was, I mean, you've used the word plan several times, and so I want to have you talk a little bit more about the plan part versus just the doing part, because I know as a business owner, right, we're just trying to grow, right? We're trying to grow, we're trying to grow, we're trying to get more sales, more sales, more sales, and that can turn into a lot of activity, right? A lot of things that we're doing, and owners are oftentimes busy just doing a whole bunch of stuff. But that's
Yeah,
not the same thing as a plan.
yeah, exactly.
So how can you as a CFO help an owner get out of the doing mode, not just working in their business, but just get out of the doing mode so that they're being smart about what they're doing by having more of a long-term plan.
Yeah, one of my favorite quotes is by Dwight Eisenhower, the former president. He said, "Plans are worthless, but planning is everything." And the discussions that you have around planning, and it's almost like you make an estimate. If you ask me to estimate something, the chances of it, it's going to be wrong. No matter what I say, I guarantee that's going to be wrong, but it's going to give us a guide on how we move forward and how we evaluate it and determine if we're even thinking about it correctly. So the plan is really just a discussion of everything that we think and how everything works and how it interacts with other things. And most businesses, I think the latest stat I saw was about half of businesses even make a budget. And I would, based on my experience, less than half of those ever pull the budget out or look at it after it's done. And there's circumstances that change. And are we tracking the impact of those changes? Did we anticipate those changes? Can we make different models that say, if this happens, then what do we do? And I think it's those discussions over and over that allow you to prepare for the potential risk of something happening that could be catastrophic. And most
Yeah.
businesses encounter these things once in their life cycle, where I've worked with a couple hundred companies probably over my tenure, where that's an awful lot of experience seeing numerous business models and understanding that the experience I have to know what could be coming could be something that only happens once in their life and they couldn't recover from.
Yep, absolutely. I'm going to pull up another question here, but I do see some questions in some chat, so I just want to real quickly address those. There was a question in the chat. It says, as a CFO in an advisor role, what impact do you ultimately make for an organization or company? And just a heads up, we do have a question later in the webinar specifically about that. So if you'll hold on to that one until we get to that, but we will get there. And then there was a couple of questions in the question panel about polling and questions. So I've only done one poll so far. There's going to be another poll here in just a minute, but the normal questions that we're going through, those aren't polls. But we'll get to the actual polls here in just a minute. So thanks for letting us know. Okay, so let me go to the next question, and this is, again, a lot of these things really we're talking about. There's a lot of overlap in terms of what we're talking about here. And so the next question that we had was, how can companies minimize the risk of business failure? In other words, improving the likelihood of business success. And I want to give just like one example from what I've heard people say and kind of see kind of where you go with that. Obviously, there's a lot of things that you can do to help a company minimize business failure. So I want you to definitely share all that you can on that. But one of the things that I keep hearing from folks is that it's easy to grow too fast or trying to grow so quickly that you ultimately go out of business trying. And that might be not one of those things that's just like immediately, oh, I get that. Is it possible to grow too fast? So kind of just talk about how do you as a CFO minimize the risk of business failure?
Yeah, I think when we say grow too fast, it really talks to uncontrolled, unchecked growth. And the way you minimize risk, the best way to minimize risk is to quantify risk. And
Hmm.
when we're having these coaching sessions, I ask tough questions of the business owners. And a lot of times they don't have a board of directors. So with my work in a lot of different companies on the public side, there was a board of directors that was asking these questions. But if you own a 3, 4, 5 million, $10 million company, it may just be you that's responsible for everything, making every decision, and every hard problem gets to you. You only get the hard problems, and you get the worst of the hardest problems, the ones that no one can solve. You really get this kind of myopic view of the company, and you can't look at other things. You're just solving problems. So you really need to take yourself outside of the company to put on this hat. And that's one thing that we help facilitate, where you're really looking at the numbers from a much higher level. And the bigger you go without guidance, the more you're working on just isolated problems. And the thing that I mentioned before about the risk of something happening that could put your company out of business, like 100% tariff on China, or one of your main suppliers stops ordering, this is one of those things that can't be minimized. That there may be only a 10% risk, but if you haven't talked about it, when you're in the middle of the panic, you're going to make decisions that aren't well thought out, and you won't have a contingency plan. And to the staff, it'll look like management doesn't know what they're doing. So it's super important to have variable, like we call them flexible budgets, where it's like, what if this happened? What if that happened? And another um, consequence of rapid growth is rapid cost increase, where you bring on that one more marginal customer, and all of a sudden you need a new salesperson, you need a new warehouse, you're all of a sudden qualified to report taxes in a different state. There's so many things that you don't think
Right.
about, that one more action could trigger this. And without somebody telling you what's ahead, when you're barreling down the highway, if you don't know what's ahead of you down the road past your immediate vision, you can get in a lot of trouble really quickly. So I think growing too fast is really a function of uncontrolled, unquantified risk growth.
Interesting. Interesting. Well, like I think of like these very large companies that we hear about in the news, and like Amazon. I just remember Amazon. They were unprofitable for how many years because they were trying to dominate the world, right? Uber, same thing. It's like, and they were trying to take over the world with with the gig economy and trying to dominate the taxi business and that kind of stuff, but they were not profitable. I mean, so they're spending money and tons and tons and tons of money. And I guess thankfully for them, right, they had investors, they had series one, A, B, C, D, all these different investing rounds where they're always getting more money, more money, more money to keep growing. But I think your typical, and who we're really primarily talking to here, your typical small, medium-sized company probably doesn't have unlimited money that could just be dumped into a company to keep you growing. You've got to, if you're doing it right, without external funding, you're trying to grow a little bit of sales and a little bit of profit, and then a little bit more sales and a little bit more profit, right? It's more of a balancing act.
Yeah, I've worked with many publicly traded companies, and it's a very different structure as far as the return on investment that the investors want and the trajectory of the stock. There's many things that really go into that model, where the best return on any possible dollar that you can acquire is to put it back into the business when you're someone like Amazon. But to your point of the measured, a little growth, a little profit, I think that speaks right to what we're doing, where we know if we see a certain level of growth, we know how the expenses are going to correlate, and we know when we can bring on more people, buy more machinery, move to new offices, and that stuff is really built in. And it goes from the I think we can do this to I know we can do this.
Yeah, for sure. And I think again, it keeps coming back to the plan. It's like if you don't have a plan, every single one of these things that we're talking about is a surprise.
Yeah,
It's like, oh
exactly.
crap, we got to go buy a warehouse, go build a warehouse. Oh crap, we need to go hire 5 more people. Whereas if I mean, I think it's probably impossible to completely avoid those surprises, but the goal is to minimize them, minimize the risk, minimize those sudden things. So let me go ahead and pull up the next poll, and everybody on the screen should be able to see this right now. So on your screen in the next couple of seconds, you ought to be able to see the second poll. Go ahead and take a couple seconds to answer that. The poll is, what is your biggest question or concern related to hiring a CFO? One answer might be, can my existing bookkeeper or controller do this for me? Can I do this myself? Can I afford this? Is now the right time to hire a CFO? What is the opportunity cost of not hiring a CFO? So give you a few more seconds here and to answer that, we'll get enough feedback and then we'll share the results. So we've got a variety of answers here. And all right, 5, 4, 3, 2, 1. All right, here we go. All right, let me share the results. The results, Kevin, pretty even. One question is, can I do this myself? Which is a great question. Another is, can I afford this? Which we are going to talk about a little bit later in the webinar. And then the third, what is the opportunity cost of not hiring a CFO? So why don't you just maybe address one of those, which is can you do it yourself?
That one I love. And I often think of this as a personal trainer. And it's like I can do anything a personal trainer can tell me to do. But unless I'm in training and I have accountability and I have a specific routine or a specific time where I'm going to train dedicated every month, week after week, and I monitor the results based on my inputs, am I going to see much better results than if I was doing it myself?
Yeah, we could talk about this particular one all day long. My wife and I hired a nutritionist not too long ago, and that's, by the way, after trying to do it on our own for a while. It's
Yeah.
like, so it's even though I think I mostly eat okay, it's like I need some help. I need some accountability every once in a while to just say, maybe you shouldn't do that. Maybe you shouldn't eat that. No, you don't need that ice cream. And so having someone like you, whether it's needed or not, is still helpful, right? And that's that coaching, that guidance, that have you thought, I think you actually mentioned it at the very beginning, which is a lot of times it's just asking the right questions.
Yeah. Well,
Yeah.
I think of like, what if you had a blood test every month that monitored how what you were eating affected your health, the statistics and your health measurements. And this is really kind of the same parallel where we're making assumptions, we're making understanding or establishing understanding of how things work, and then we're monitoring that thing. And especially with food, we think with emotion. It's like, I think I'll be okay if I eat this. It's a feeling,
Mhm.
and it's not really, there's no real structure to it. And when you step outside the confines of you're running quickly in your business or in life, and it's like, I'm just going to grab this to eat, or I'm just going to sign this check.
Yeah.
There's really huge implications of going outside the system. And the more you are outside the system, the more you stay outside the system. And all of a sudden, it's like navigating a boat without checking the compass heading. And all of a sudden, you're way off course down the road. And it's just that, it's that structure, it's that accountability, and
Yep.
it's the tough questions.
You know what I found? I mean, I think this is, to me, this is one of those like human psychology things, and you know, I know some folks in my own personal world that think they can do everything, and oftentimes they can, right? I mean, they'll go pull something up on YouTube, they'll figure it out. I'm the kind of guy that likes to tinker. I'll before I go call somebody, I'll like we had a plumbing issue last month, and I tried to figure it out. Right, I went out and bought the equipment and bought the thing. I tried to fix it myself, and then of course at the end of the day, my wife's like, "Yeah, you still need to call the plumber because it's not fixed, and you've wasted." I still can't, you you know. So I just think it's interesting. I mean, I can resonate, I can resemble that because I'm one of those people that tries to do it myself. But what I think is interesting about it is, and I'm not talking about CFO, I'm just kind of like that. The big picture is, if I need to, get a new roof put on my house, I'm not going to try that. I'm going to go hire somebody who is an expert at roofing, because trust me, they're going to do it right. They're going to do it better. They're going to do it faster. They're going to avoid all the mistakes because they've already made the mistakes 20 times, right? They've already figured this out. Um, and you could take that concept and apply that to pretty much everything, right? Whether that's, I'm a bookkeeper, I'm an expert bookkeeper. You could try to be a bookkeeper, but without the formal training, without the experience, you're probably not going to do it as well or as quickly or without making mistakes.
Yeah,
And I think
absolutely.
it's silly to think, I mean, again, I'm not making fun of anybody, but I think it's silly to think that, you know, somebody who is really, really good at selling or manufacturing or building something can at the same time feel like they can be the same level of expertise in the financial realm, the financial guidance, the financial strategy, as a CFO.
Yeah, it's just hard to look at both sides of the coin. And when you have somebody coming from the outside and saying, "This is what I've seen. How does your company deal with this situation?"
Yep.
It it changes everything. And also, there, when you're having discussions with someone else, there's this group think that almost every time gives you solutions and questions that you never would have thought of yourself.
Right.
Because when you're starting to answer these questions, you're like, oh, three more questions pop up. So
Yeah.
it's just a fantastic exercise.
Yeah. Absolutely. All right. I'm going to pull up the next question, and then we're going to answer one that was in the question panel, but let's go ahead and pull it up on screen here. And that is, what problems does a CFO solve? So this kind of answers the same question of, what problems does a CFO solve, and effectively, what are the outcomes that you could expect by working with a CFO, because you're obviously helping solve those problems. So take some time here, because I think this is a really, really important topic. What are the kind of problems that you as a CFO would solve?
One of the biggest ones is dealing with irregularities. Like if you have any sort of flow in your business that's not constant or even increasing constantly, um, this is a place for planning. This is a place for mitigating strategies. That what happens if we don't get this check? What happens if we don't get the shipment? So anything where there could be some risk of something being disrupted that by the nature of your business is highly predictable. That's one of the things that we can help plan for. Another thing is changes in plans and assumptions. When you set up a plan, you go out to business, you think you're going to have these customers, they're going to pay this rate, they're going to want this product. Well, what happens when those things change? As long as you're still selling stuff, you don't bother to look at maybe this product is not as profitable as the products we thought they were going to be, or
Mm,
we're not getting the penetration in this market versus that market. And then a variance analysis is just huge, where if you're not hitting budget, why are you not hitting budget? And what do we need to change to either change our expectations or change our inputs to get a different output? And again, I know I keep saying this over and over, but it's very individualized to the business itself. And I've worked with multiple businesses in the same industry, and they still each have different problems, even they do the exact same thing.
hmm
One may have fulfillment done by a third party. One may have two warehouses. One may take inbound orders. One may have sales people on the road. There's just so many different variables that even in the same industry, there's things that shift within the company that you need to account for. And it just all goes back to anticipating if this risk occurs, what do we do then? Or how susceptible is this assumption to risk of not being correct?
Well, and talk about the money side of this, because like again, so I'm just going to do a deep dive into one example that has come up frequently for us in the last couple of months is like, garage door installation companies, home service installation companies, all of these companies that send people out and they are going into a home, and they're servicing a business, servicing a home in some level, whether it's again garage door, maybe it's HVAC, maybe it's electrical, maybe it's plumbing, whatever. And all of these folks have to have equipment on their truck, right? So they've got to invest in trucks.
Yeah.
They've got to invest in all the stuff that they're going to put on the truck, right? They've got to obviously have the people that are going out and driving, and then there's the technology, like, is it all paper, or do they scan stuff and digitally have people sending, and is it all automated and docu-signed and all this other stuff? But that investment to go out and buy a $75,000 truck, that's not just something you just go do, right? Or, you don't just go from one truck to 10 trucks. So how do you, as a company in maybe in that space that's trying to grow, how do you help them manage those capital investments?
Yeah, there's so much in that question. I mean, if
Yeah.
you just look at a truck where, say, you started 5 years ago with three trucks and they cost $25,000, now the same truck is $50,000. Say you have an advertisement out there where we'll fix your garage door for $150, and your parts are increasing, but every truck on the road is like a rolling warehouse. So you're
hmm
not seeing the margins deteriorate until you're fulfilling these future sales and you have to reorder and get these products. So it's just, I've seen so many examples where it's like, yes, this is everything looks profitable, but are our inputs constant? And if you keep going at the same rate under the same assumptions, once you have to make that jump to the $50,000 truck and the $200 material cost, that's one of the risks that it's just too late. So
Yep.
soon as we see these things emerging, we start addressing them. And a lot of times there's price increases ahead of the deteriorating margins. And
Yep.
we're looking for alternative suppliers. You may be looking for used vehicles instead of new vehicles. It's just everything is a specific, every option's available for evaluation
Right.
and
Yeah.
ahead of when you need it is the real key.
Yeah, and you said it right there too, just like the pricing strategies. Like again, we like to think we can just come up with a price and hope people will pay, and maybe they will, maybe they won't. But that doesn't mean we shouldn't at some point raise our prices to account for the fact that we keep raising our employee compensation, right? It's like at some level you've got to do both. Otherwise, you're just getting less and less profitable on that work that's getting done. So makes a lot of sense. Let me ask the next question here, and that is going to be, how does a CFO measure success? So, I mean, and really, you could look at this two ways. You could look at this as, okay, in your role, how do you measure your own success working with a business? But maybe more specifically, how does a business owner know that they're getting a successful outcome?
Yeah, a lot of the success comes around the metrics that we design. There's about 15 metrics that are going to describe your revenue, your margin, and your cash flow. And when we see that these metrics are holding steady based on the outputs of the business, that's the first sign where we can predict. It's almost like scientific theory, or I can't remember the term, but like the scientific method where you observe something. And it's like we define a metric and we alter that metric and we see that it changed the business in the way that we expected. And it goes back to the metrics of, we're tracking to the goals that the company has. We're using the metrics to achieve those goals, and the monthly meetings or the weekly meetings, whatever we decide how we're gonna meet together, those are the things that we see how well those metrics are working. And really, the owner is gonna have a dashboard that he can look at every day, and we're gonna see how these things are tracking. And that's the success right there. Every day right in front of you is gonna be, this is working, this is not working. And then if something happens in the business and it doesn't show up in a metric, well, that's another conversation that we need to have, that some assumption wasn't properly vetted or properly considered. But I put a lot of emphasis on the metrics and the collaboration, and that the owner has buy-in, that they have the clarity to see into their business, uh, that the cash flow is going to hit close to zero. Maybe we need a line of credit or tap the line of credit or something, and then we'll come back up. And
Yeah.
when you measure
It sounds,
those things.
it sounds like it's very, very individualized, no matter what. Like you said, even in the same industry, two companies gonna have different needs based on everything. Owner, size, staff, product line, services. I mean, everything. Um, I mean, wow. I mean, again, you could just keep going on and on and on. Is there like one metric that's like the most important with all the clients that you tend to work with? Like profit margin, operating profit, net profit. I mean, like obviously those are very, very, raw financial numbers, but
Yeah, one of the things that we'd like to get a handle on is their margin, the weighted margin, as far as the products they're selling versus, or the distribution of sales, I should say, based on the profit margin. So
hmm,
they could be making 50% on their bottom 10% of sales volume products.
hmm,
So we try to look at a distribution of, these products are more profitable. Maybe our top seller only makes a 10% margin. Maybe our top product sells very often with a product that makes a lot higher margin, and that's a promotional item or a kit that you can sell together.
right,
So I think there's a very there's it's you have to look at your profit margin by product every single month, if not weekly. But you also have to look at the weighted impact of that. What are you selling? What's the sales volume
right.
of higher or lower performing products?
Yeah, and I guess when you think of the CFO advisory role, I mean, you're working directly with an owner, and I imagine a lot of it depends on what their goal is, right? Some of them are trying to exit the business; they're trying to grow the business to the point where they could sell it. Others are trying to maximize cash flow. Others are trying to just minimize taxes. I mean, there's so many different ways that an owner looks at their business. And it sounds like it's your job to kind of get in, roll up the sleeves, figure out what they're trying to do, and then help them get there with a plan, profitably doing it, right? Not just growing for growth's sake. Um, I've got another poll that I want to pull up. Um, so let me launch this third poll here, and everybody should see this now. It says, which outcomes are most important to you? So again, those of you that are watching and listening here, um, what are the most important things for you in your business and or with your clients that you work with? Achieving or growing profitably, greater clarity on financials and what's driving your business, And oh, and this is a multiple choice, so you can pick multiple answers there that you feel like are important. Predictable cash flow through proper budgeting and forecasting. Growing business value for a profitable exit, or maybe simply minimizing the risk of business failure. So lots of different options here. I'm going to give you a couple more seconds and then we'll share the results. And I think this is going to be fascinating.
Mhm.
All right, 3, 2, 1. All right, poll's over. I'm going to share the results. So, Kevin, overwhelmingly, the most important outcome is achieving or growing profitability. So, getting profitable and growing profitability. What do you think about that? Obviously, it makes sense.
Yeah, definitely. Everybody wants the best return for their inputs.
Yep. And then the second one, the second most voted on is predictable cash flow. So, I mean, it's one thing to go, okay, I know at the end of the year I made money and I know that I was profitable, but there could be a lot of stress during the year where they're not sure if they're gonna have it, right? So, is that something you can help out with too, just in terms of helping them be more, having them have more predictable cash flow?
Oh, yeah, absolutely. And I was going to say the second point to your previous question about the easiest or the clearest things to look at. One of them is the AR/AP sales cash cycle.
Hmm.
So you can sell truckloads of stuff, but if you're not getting paid for it, it doesn't really help you. But I think predicting that cash flow and even making small adjustments in either your payables or your receivables can really dramatically change things.
Okay, good. Well, I'm going to go ahead and share my screen. We're going to go to the next two questions, and we're almost to the end of the hour. So, the questions that I have on screen now, I think you should be able to see them. Correct me if I'm wrong. Question 8. Does everybody see that? What does working with a CFO advisor look like? In other words, like, how does it work? Just kind of break down, if somebody called you up and said, hey, I've heard about CFO stuff, I'm thinking about this. How do you work with someone, just structurally, or just, what does that typically look like? Paint us a picture.
Yeah, and a broad overview, we have a four-step process where we really want to understand what's going on in the business and what's important to the owner. And we want to get the goals, the priorities, the big problems, because everything is going to come out that the owner is aware of. And the earlier you have these discussions, the more these points are going to be clearer to you. And then we get into kind of a budgeting for a framework of how things are supposed to be. It could be budgeting, it could be financial modeling, and then we start looking. The third step would be we're looking at the forecast. And the forecast is we can either change a budget where, like in July, we'll have a 7 actual plus 5 forecasted where sales are down this year. And then you want to adjust your next 5 months because that's going to affect your cash flow, your profitability, and your expense ratio. So we want to have the ability to do flexible budgeting or forecasting. And then we, once these models are in place, then we have our feedback meetings where we talk through the models and we let operations flow through and see how true these models were, if the metrics that we identified are working as expected, and if they're tracking towards the goals, and if we can change these or what effect the change in those has on attaining those goals.
So a little bit of goal setting, a little bit of budgeting and financial planning, and then there's basically check-ins and adjustments as you go to help you keep going in the right direction.
Exactly.
Okay. And is, again, just, sometimes setting expectations is really helpful. So we'll talk about cost here in a second, but in terms of setting expectations, I know there's some folks that, like, they want immediate results. Like, I'm signing you up today, I'm expecting tomorrow to see results. Like, from your own experience. So again, just being realistic, how long does it typically take for a company to start seeing real tangible results of working with someone like you?
Well, like if you're working with a personal trainer, you're not going to hire a trainer and then enter bodybuilding competitions, but
At least not
immediately.
do it well.
But along the way, you do see the method we really focus on is the clarity, confidence, and then control. So the clarity starts to come almost immediately when you're building the models. The confidence comes when you're looking at these models are tracking based on the variables to how your business operates. And the control is we change the variables to the individual goals that your company has. But I think it's going to take you a good 3 months to get to the point where you really are starting to feel that you have the power over what's going on in your company and you can really control the outcomes.
Okay. Well, and without throwing the slide, let's just go to that next topic, which is kind of like the pink elephant, which is, okay, how much does all this stuff cost? But what I want you to kind of just help everybody that's watching and learning here see kind of the big picture differences between what we talked about at the beginning. There's a cost to hiring a full-time CFO. There's a cost to hiring a fractional CFO, and then there's a cost to hiring a CFO advisory. And there's no one size fits all model for that, but just kind of give us some ballparks, that people should expect for those kind of three different levels.
Yeah, if you're looking to hire a full-time CFO, even at the startup level, you're looking at 130 grand for a startup, which is 10 grand a month. And a lot of companies are in the mid 200s. 250 is not an uncommon number for a mid-sized business CFO. Then when you look at the fractional CFO, which is more part-time CFO, you're looking at 36,000 a year to close to 200 a year, depending on what they're doing. And when with our packages, it's a fraction of those costs, really. Even when we work on the three tier model, and the basis of the model is how often are we working together? How often are we updating the metrics? You'll have the dashboards, but how often are we recalibrating? How often are we doing scenarios? Are we meeting weekly? Or are we meeting monthly? Are we updating the budgets quarterly? Or are we updating them constantly? So that's
Yep.
really where the delineation is. And like I said, at a basic level, you get access to really powerful insight into your business for just a small fraction of the cost.
Yeah, and I think for folks watching again right now, I think your entry level for the packages that we've kind of put together is like $1,500 a month. That's where it starts.
Yeah.
Obviously, you can add and you can go to the higher and higher levels if you want more and more frequently. But I mean, you could for as little as 1,500 a month, you could have an expert level CFO to help guide you and give you that coaching that you need to help really shore up the financial and the strategic part of your growth plan. Awesome. So let me share, again, we're almost out of time here. So let me go ahead and share um, this next slide here. Just for questions. So if you haven't had your question answered, please do take the time to put in a question now, or you can put it in the chat panel. But just some basic stuff. VARC Solutions, obviously, we've partnered with Kevin to provide those CFO advisory services. He's the best in the business. He's can really take care of you. But just to let you know, we've been doing this kind of work for about 26 years. QuickBooks, QuickBase experts. We do all things QuickBooks and accounting and bookkeeping. So if you need any help with that stuff, let us know. But if you're trying to get a hold of Kevin for those CFO services, you can reach out to us at varksolutions.com. Phone number is listed there, email address is listed there, and we'll make sure that you get in touch with Kevin so he can have that introductory conversation with you. I'm not seeing any questions coming in the panel, so let me go ahead and throw up our last poll here for the webinar. And give me 1 second here. Pull up the last poll. All right. So for those of you that are still here, that have made it to the end, which of the following would interest you? Some of the things we've already talked about, maybe discussing a strategic business challenge that you're wrestling with, learning how to grow your business value for those of you that are thinking about selling or exiting your business in the next 3 to 5 years. Those are some great conversations to have. Maybe you just need help cleaning up your books so that someone like Kevin can actually do his job and make sure that besides the cleanup, you're looking at your financials strategically. Kevin, I know we're laughing. That's a problem with a lot of clients, a lot of companies. Maybe creating financial dashboards so you can understand what's happening in your business, helping with cash flow to make it more predictable, and or none of the above. Okay. So again, give me another couple seconds here to answer this last poll. And then for those of you that are needing CPE credit, I'm going to show that last slide here in just a second. All right, but I'm going to go ahead and end the poll and share the results. So obviously we got some folks that would love some help with strategic business challenge help, learning how to grow business value, help cleaning up your books. Obviously, and some people are all good, which is great. All right, perfect. Let me again go to just the last slide here. For those of you that are needing CPE credit, and I'm going to share this link with you in the chat panel. So if you're needing CPE credit, okay, all you need to do is give me 1 second here. I think this should work. A second, I gotta do one of those copy paste things, Kevin. Give me a second here. I'm gonna put this in the chat panel. This is a link to an evaluation form. So please do go there and fill out the evaluation form. If you need CPE credit, just put in the course, the date, and we'll make sure and get that to you. If for whatever reason that link didn't work or you don't have it, you can email us at team@varksolutions.com and we'll make sure that you get that link. We'll give you a copy of the recording of today's webinar. And in the meantime, Kevin, any last words? Thanks for obviously thanks for being here and sharing your expertise.
Yeah, thanks for having me. Look forward to working together.
Awesome. So for those of you that did have questions, if we didn't get those answered, we will make sure that we follow up with you after the webinar and get those questions answered. And in the meantime, Kevin, thanks for being part of this, and love your expertise and your desire to help people.
Yeah, thank you.
All right, I'm going to go ahead and hit stop recording, and then we'll still hang out for a few more minutes for anybody that has any lingering questions.